Good evening, traders. Richard Jacobs here, and welcome to episode 7 for 2018 on our Underdog Trade Education channel. I hope you all had a good day in the markets, and it's certainly been an interesting day as we saw ranges really opening up with some good directional bias, and we'll get into analyzing that in a bit on an intraday basis. But maybe let's kick off with, as we always do, with our analysis of what's been happening on the daily charts, and that's what you're seeing on your screens at the moment. Daily chart of the top 40, and clearly here we can see this what we regard as a retracement following that break of structure to the downside in sort of late November. We see that this retracement has been progressing fairly strongly over the past few days, pushing up, putting in higher highs and higher closes, and really we regarded this opening up as an opportunity for us to weight our intraday trades a bit more and try and take advantage of those intraday ranges. You'll recall from the last recording that didn't work out too well given the price structure intraday on yesterday's market, but certainly today was a different story. Just in terms of the candlesticks and where we're ending up at the moment, we're tapping the 78.6 retracement of this leg of the move down. One of the things you'll recall I've said in the past is that when the market starts to push and close inside of this zone between the 78.6 and the 100% level, it sends up a few call it red flags for me in terms of whether we're going to see this market roll over to the upside and break structure to the upside, taking out that previous high which was printed on the 21st of November, or whether we're going to start to see that market finally continue from a deeper retracement point, put in the continuation move to the downside. So that probability in the way we approach it, if we see a close inside this zone, we'd actually be very wary of just trying to short any potential bearish signals coming out of this market on a daily basis. So that's what we're seeing at the moment. Has to be said though that this is a bullish candle, higher high, higher close, but it didn't end well off its intraday highs, and you'll see that a bit better on the intraday chart, but it pushed to the upside and then came back quite strongly into the close. So that's also something to bear in mind in terms of the thinking. Is there signs of exhaustion from the bulls, given how hard that they pushed this market to the upside? But as I said, what was gratifying is the ranges. I think we had something like close to a 1,000-point range, maybe 950 points or thereabouts, to work with in the markets, and that's always good to see. And that's caused our ATR calculation, or our ATR measure, to actually tick to the upside back up above its 50-period moving average, which is also something very positive to us as trend traders on an intraday basis. So looking at that intraday analysis, and this is drilling down to the 15-minute version of what was on the previous screen. I've just highlighted in red the price structure for the current day. So we started off, overnight the US markets were quite weak, so we actually gapped down at the open, which was unfortunate because we were involved in a long position, and our stops got triggered and got taken out of there, only to see the market break structure to the downside and then pretty much just reverse and push up all the way into through the lunchtime session, right up to this 54,400 level over here. And then you see this move to the downside, which is what I was talking about, the market coming off its intraday highs. Structurally, if you look at this 15-minute chart, we broke the structure level over here. Markets pushed to the upside. We're in a retracement. Intraday short term, this is certainly bullish. This is simply a retracement within that bullish trend. We tapped into around about this 38.2 retracement level at the moment. What's interesting is there is a nice confluence. It's a bit hidden here. Let me just move this line out of the way. But there's some nice confluence here between the 61.8 retracement level and this previous price structure resistance or swing high level over there, which was broken and could potentially now become support. So that means that seeing price pull back all the way to that 61.8, this could actually be a good potential support zone should we see the market pull down into there and then put in some kind of a reversal or continuation move to the upside. So if you structure trading on the 15 minute charts just using pure price structure, that may be something that you want to eyeball. Wait for the market to pull back in. Should be pretty oversold at that point in time. Look for some kind of a reason to get long. There are various reasons, opportunities one can look at. You can drop down to, well, you can't really drop down to lower time frames from a 15 minute, but maybe look at reversal candles, dojis, maybe a double bottom, something like that. Anything, some kind of an opportunity to get long, and then what you would do is you'd basically put a stop in below the swing low and then try and ride it to the upside. That's an idea to work with, or some thinking if you want to do some structured trading on the 15-minute charts in tomorrow's trading session. So short term, certainly bullish and to the upside at the moment. It's about 8:15 in the evening on Wednesday the 17th of Jan. So looking at the out of market prices at this point, it looks like the international markets are pushing to the upside, which is carrying our top 40 with it. So at the moment we're about 135 points off the close, coming in at about 54,200 or thereabouts. So it looks like a bit of consolidation or potential continuation already starting to set in. But as we saw from the overnight trading position yesterday, you don't really want to be basing your trading decisions on out of market prices. If you'd asked me last night, in fact I did make the comment last night that it looked like the downside continuation was going to commence. At one point the out of market prices on post the scandal of a year was somewhere, I think, all the way down here around about this 53,200 levels, or so we saw that it came back quite strongly in the morning just as the market opened. So we only had a little gap down at the end of the day. So keep an eye on the out of market prices, but don't necessarily put all your eggs in one basket in terms of trading them until you actually see what's happening on the structure within the futures market hours, which is what the time frame that we operate in when we're looking at these 15-minute candles. So that's what's happening from a structural point of view. How did that translate in terms of our trading? As I said, we got stopped out sorry, on an overnight position over there, took a bit of a hit, and that just sort of to close out yesterday's trading, which I spoke about in yesterday's video, we really got chopped around by the market. So despite it being a what we classify as an A day, with the markets putting in a higher close and the trend looks strong, it was quite a choppy trading session overall. Contrasted to that to today's session, where we simply pushed to the upside. We did manage to catch a bit of this. I think we got involved around about these levels over here, just after this little consolidation that you see happening around about the mid to late morning session, and we rode it pretty much all the way to around about these levels over here as the market started to roll over and retraced. So we took some points out of the market. Having a look at that, interesting looking equity curve at the moment. This is what's topping up from all the trades from yesterday. This is what we saw, a sharp pullback on the weighted equity curve, and we pretty much, look at these numbers: 542 down on a weighted basis and 535 up on a weighted basis today. So pretty much back where we started off at the beginning of the week, eliminating all yesterday's losses, and the same story on the unweighted or the standard equity curve over there. So I suppose status quo, eliminating, if you take into account the last 2 days of trading, we're back to where we were on the 15th of Jan. Still in a decent position, but more than halfway into the month. So just something, it'd be good to maintain this momentum as we go into the month. And in fact, we want to push to the upside now and try and put in some new equity highs in the next, hopefully in the next week. So keep an eye on that space. Hopefully we can book some more profits. Okay, so having looked at the intraday chart, let's also have a look at what's happening on the international market side. Let's just pull that up. Um, that's our currency pairs. Let me put up the US first. I'll come back to the currency pairs later. So that's what we're seeing on the 4-hour version of the S&P. You know, there's that move to the downside that we saw yesterday. Market pushed down quite viciously. And it's slowly been eking its way back up. In fact, we've pretty much eliminated the this break to the downside over here. And you know, if the momentum can continue to the upside and we can put in a higher high, and you know, it's going to make for some interesting possibilities in terms of where the S&P can go. What you know the bulls would not want to see is for the market to go out, because remember what happened is with this we pushed up, we tested the 2800 level, sort of rejected it and came back down, and we're pushing up again into the 2800 level. There is a risk that this market double tops. In other words, we test the 2800 level again and reject it, and that's something that would be relatively bearish and could open the door for a strong potential counter trend move. Just to illustrate, and I don't want to preempt it, you know, if we saw a double top manifesting over there, in other words, market pushed the upside and rejected it, we'd wait for confirmation, break of this midpoint over here, all the way down to 2768, and that would open up, if that did happen, so lots of ifs, that could open up a move all the way back down to around about, in fact there's some nice confluence here, all the way back to this price structure support zone over here, about 27, call it 2735s or thereabouts. So that's going to be something to keep an eye on in the coming few trading sessions, in the coming few days. But at the moment, looking relatively bullish candles on the S&P, and certainly looking like it at least wants to revisit these this previous swing high over here. If we switch over to what's happening on the currency, we're pretty much just extending this zone that we've in fact, let me extend it, this zone that we've been showing since around about, well, for pretty much the whole year, where we've you know, we've pushed down strongly, found support, just bounced around inside of this range, retested this support zone once, twice, you could probably call that a third time over there, on an intra-candle basis, fourth time, and now it looks like we want to try and push down again. If we did see a break and close outside of this zone, it's going to be very interesting, because that would add to the case for potential downside, stronger rand, not beneficial to our top 40, so that's something to keep an eye on. Conversely, we do see a bounce for the bottom of this range, and a push to the upside that would add to the momentum that the current iteration of what's happening on the S&P is also giving to the top 40, and we could see this market spike to the upside and, you know, threaten this previous swing high over here. So again, these are all things to continue to keep an eye on as we move into the second half of the month. So that's pretty much what's happening on the local side and the top 40 and the potential things influencing that. Let me pull up what's happening on our offshore trading challenge. You recall that's one of the things that we've been running since the beginning of the year, essentially taking a £10,000 balance and trading a portfolio of forex pairs, the S&P, gold and oil, for very, you know, for essentially micro units, but we'll continue to have a rolling portfolio in an attempt to benefit from positive expectation of just using pure simple price structure techniques to try and take some points and money out of this market. So let's see what's been happening on that front. Right, so we are 24 trades in, we've got 3 open positions, Win rate's taken a bit of a hiding down to 42%, but we're still sitting at about a 2.17 to 1 reward to risk. Equity curve, it's looking a bit like a price chart. Pushed up, consolidated, broke out, retesting previous structure resistance, now support, and hopefully continuing to the upside. We want to do a bit of analysis on that, but let's run through. Firstly, there were 3 trades that closed out. Unfortunately, all we took a bit of a hit, not too much. Which again, I come back to the point of the way we're approaching these things, which is try and get in. If the market moves against us, take losses as quickly as possible to minimize what those losses are, and if another opportunity does pop up, then we're happy to get involved again. So let's have a look at let's have a look at those ones that did stop out. USD Canada, that was a long position, I believe. Yep. What's been happening over here? Market had broken structure. This is the previous shelf to the upside, pushed down. We found a good opportunity to get long here, and looked like we were pushing up nicely, and then boom, we get this candle over here. I don't know if you can see it. Up, down, stop out, and that's the end of us. And that's pretty much off the back of the Bank of Canada increasing interest rates, or Reserve Bank, the equivalent to the Reserve Bank increasing interest rates, which is followed by a candle showing a strengthening of the Canadian dollar versus the US dollar. Lesson or learning probably to take from there is, even though it was forecast for a rate increase, when it actually did manifest, we had increased volatility on that's a huge 4-hour candle. You can see the spike in the ATR over here. Those kinds of decisions might be best to stay away from any currency pair which is affected when that news is expected. Nonetheless, we took a small loss on it, got stopped out. It looks to be pushing down at the moment, and probably it could, given that it's in the 78.6 retracement zone, we could see the potential for a break of structure and a continuation move to the downside over here. So we're standing aside at the moment in terms of the USD Canada. Next one was the Euro Swiss franc. So let's pull that one up. Euro franc. Again, a long position. Market had pushed to the upside, consolidated sideways over here, pushed up and broke the previous broke structure to the upside, retraced back into that structure. We saw an opportunity to get long. Unfortunately, it just tapped us out over here on our stop. We took a small loss. This is one where I should actually change that to Euro franc. These two are on our watch list. This is one where I actually wouldn't mind getting another opportunity, so we'll keep an eye on those candles because we're still fairly shallow. We just pulled into the 38.2 retracement of the last push impulse leg to the upside. So we find the right candle over here, we'd pretty much be happy to get long again and try and ride it to the upside. So certainly one that remains on our radar. And then I think the last one we got stopped out on was oil. Similar finding, really. Market had pushed to the upside, just put in that higher close, but certainly a new high. Then we got this retracement, boom, 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 boom. I pulled back towards the 78.6, but then it put in this really nice looking fat green candle over here, and we decided to get long, only to see it stop us out fairly quickly. Again, this is one where, if we see the right candle shape, because it is pushing up relatively bullishly at the moment, again, if we see the right candle printing over here, we might want to get involved again to the upside, but we'll eyeball that. The other risk that one just needs to be wary of is this over here, potential left shoulder, head, and could be a potential right shoulder forming over here. If that one does play out, just projecting where that market could fall to, it projects all the way down here. Not really much in terms of previous price structure. and maybe you want to aim for this previous swing low over here. So again, that's just something to bear in mind, in back of mind, in terms of what's playing out on the oil market. The ones that are open at the moment, the Euro Japan, that's underwater. You recall we got short. We took 2 bites. So this one over here, we got short, got stopped out, got short again, nearly got stopped out. The market looked like it was rolling to the downside, sort of just chugging along sideways. So we about 22 pounds down at the moment. We've got 41 pounds of risk in this trade. So we're about halfway towards the stop. This is one we're just going to leave. If it pops to the upside and stops us out, so be it. Yeah, nothing much to do at this point in terms of euro yen. The other one we've been in for a few days is the euro pound. This is looking pretty decent at the moment. So this is the looks like we're stretching towards our target zone at the moment. We've had to exercise good patience. We actually got short on this on Friday, so about 5 days ago, and then pushed to the downside, bumbled along sideways, and now finally it's looking like it's stretching towards that target zone. So hopefully on this candlestick, to be honest, we can push down towards and targets. That would be awesome. So we can lock in some profits over there. And the other open position is the most recent one. I think I just took it this evening. Is USD Swiss franc. There we go. So what happened there was, and it's quite one of those really quick ones. So let me fatten this up so you can actually see what's going on. Market puts in a lower low over here, pushes to the downside, lower close, put in this retracement all the way back up, tapped at 78.6, then put in this bearish looking candle. Managed to get in at a pretty decent price over here. I'll put a limit order on this one following this candle because I wanted at least a 1-to-1 reward to risk. So we're risking 33 pounds to make 33 pounds. Don't like an inverted reward to risk. So I could have entered on the close of that candle, but I really don't like an inverted reward to risk on any of my trades. So you know, I'd rather miss a trade than put an inverted reward to risk in play. So this one actually pulled back nicely, got us in, and then pretty much reversed on a dime, and it's looking also like it's pushing down nicely toward target levels, about 22, 23 of the 32 pounds. So this is looking like a decent opportunity as well. So that's pretty much it. And as I said, the oil to a certain extent does remain on our radar, and definitely the euro Swiss potential long does stay on our radar as well. So that's what's happening on that front. Anything else to report to you guys? Nope. I think that's all for today. Guys, I wish you well in your trading, and I'll try and do another video before the end of the week to see how some of these positions and things are playing out. Otherwise, enjoy your trading session tomorrow, and I shall chat to you soon. Cheers.